Penny stocks are a stock category that many disregard without careful consideration, given their reputation for high risk and volatility. However, a large segment of the market recognizes that the growth potential of such stocks are unmatched, and cannot be achieved with stocks that are priced far higher in magnitude. Penny stocks are also far more likely to go unnoticed by the market at large, which means that these could be trading significantly below their intrinsic values. This is why it is not uncommon for certain stocks to shoot up from $2 to $20 in a matter of just a few years. Aggressively accumulating such stocks, with the right planning, could result in investors building up a fortune in a short-term period. In this video, we bring to you some of the prime opportunities that are worth considering among the wider sea of penny stocks. We present the top 5 penny stocks that you could invest in for less than $2 per share. The first penny stock we take a look at is the next-gen data center developer, Applied Blockchain, which provides infrastructure and computing solutions to its customers. The stock, which holds the ticker APLD, and trades at $1.90, recently saw a Nasdaq uplisting, coinciding with its shifting business strategy. The company's business model is intriguing, and essentially involves colocation, where clients can utilize APLD facilities to run their own computing hardware for blockchain mining. Customers, in return for a fixed fee, receive full maintenance and operating services, which results in predictable and stable revenue for the company. Although APLD is faced with a number of headwinds in the short term, which include increasing energy costs and uncertainty in the cryptocurrency market, its prospects into the long term look highly promising. For one, there is no other next-generation data center operating to the same degree as Applied Blockchain, which makes it well-positioned to take off when the wider cryptocurrency market does. This continues to be predicted by analysts that foresee the inevitability of a crashing dollar. APLD has also been entering into deals with large-scale hosting clients, such as Marathon Digital. Moreover, the company is also fixated on a long-term strategy of increasing the capacity and quantity of its facilities and network in the most feasible jurisdictions. Given its robust and low-risk business model, the company aims to soar high. It delivered revenue worth $8.5 million in 2022, which it projects to up to a staggering $105 million by next year. The guidance for 2024 has been set at a whopping $400 million. APLD clearly holds a tremendous growth runway, which it is fully committed to rising by. The second stock on our list is the oil and gas player, Gran Tierra Energy, which holds the ticker GTE. With a market capitalization of only $450 million, and a share price of $1.30, GTE is one of the micro players in the oil and gas arena, which is dominated by some of the largest companies in the world. However, Gran Tierra's small size gives it a unique advantage that its more sizable peers do not hold, and that is its tremendous growth runway, which comes with its potential to drastically scale up. Gran Tierra, which owns oil reserves in both Colombia and Ecuador, has seen a surge in its performance, by virtually every metric, as a result of the oil price spike experienced this year. In the first 6 months of 2022, GTE reeled in a revenue figure of $380 million, which was almost double the prior year's figure of $192 million. Where the last year, the company delivered a net loss of $97 million, this year it massively exceeded expectations, with its profit figure of $65 million. The result was staggering cash flows, which the management strategically used for enhancing its production capacity, as well as reducing its debt. This is exactly why GTE is perhaps the best choice to consider, for those looking to hold an oil stock. Its growth potential is tremendous, while the company is playing its cards strategically, to ensure longer-term financial sustainability. Before we move on to the next stock, we'd like you to know that we offer a morning newsletter to our email subscribers. Prior to the market opening, we send our subscribers an informative email about which stocks are moving, or about to move. you will get an overview of key earnings reports, recent insider transactions, analyst upgrades, and downgrades. To take advantage of this offer, you can find the link in the description box. If you're still with us, it means you've liked our video. Do click on the like button to show your support. Number 3 on our list is the uranium exploration and development player, Denison Mines Corp, which trades by the ticker DNN. Given its market cap of $900 million, and its share price of $1.20, DNN is by no means a mega company and instead holds a penny stock that investors could consider. The company excels in the situ recovery method, which delivers it a substantial edge over competing players in the uranium domain. Similarly, the company holds 2.5 million tons of uranium, which it acquired at less than $30 per pound. Prices in the current spot market for the material are above the $50 mark, which analysts expect to climb to the $65 mark before 2024. Although this exposes DNN stock to the volatility of uranium spot price, it significantly adds tremendous value to the company. With the situ recovery method, the company aims at bringing the cost of producing additional revenue to as low as $8.90 per pound. This significantly adds to the value creation propensity of the company as a whole. DNN has evidently benefited from this approach, which delivers it a competitive edge, considering its year-on-year top and bottom line growth of 7.5% and 16% respectively. When using the future uranium price of $65 per pound, the cumulative net present value of the company's various projects, plus its uranium holdings amounts to over $2.3 billion. This is significantly higher than its current market capitalization of $900 million, which signals a strong buying opportunity for investors. The fourth stock we present is of the satellite communication company, Globalstar Inc., which trades by the ticker GSAT. Globalstar has over the years established one of the strongest low Earth orbit networks, with 24 ground stations, and coverage to over 120 countries around the world. Satellite communication had found a renewed importance in global affairs this year, after Elon Musk decided to provide Starlink communication services to Ukraine, in the midst of its invasion by Russia. Globalstar is one name in the realm of satellite communications that is presently a favorite amongst investors, considering its 58% price jump since the start of the year. One reason for this bullish momentum is its deal with the tech giant, Apple Inc. The company aims to include within the iPhone 14 an emergency call feature, even outside service coverage areas, by employing the GSAT network. Although top-line growth in the last year stood at just over 10%, GSAT had been loss-making for a number of years now. Its price rise suggests anticipation of a high degree of promise, as well as a global industry disruption. There have even been rumors of Apple possibly launching satellite communication devices, which could mean a breakthrough for its existing relationship with Globalstar. The GSAT penny stock is a speculative buy, but its deal with Apple is certainly great news for the company's prospects. It offers long-term sustainability, considering that Apple will most likely retain the emergency satellite feature in all its future iPhones and related communication devices. The final stock on our list is that of Electrameccanica, a Canadian developer of sustainable and environmentally friendly EVs, which holds the ticker SOLO. The company takes a unique approach to sustainable motor vehicles, and proposes a single-seat electric vehicle with 3 wheels, as the most efficient form of motor travel. This idea seeks to potentially revolutionize the approach to commuting, based on statistics that show 76% of drivers in the US travel alone in their cars, with 90% of trips being less than 20 miles in distance. The flagship vehicle, labeled the Solo, also aims to disrupt the global food delivery industry, which has been valued at over $150 billion in the present year. The company offers a cargo version of the Solo, with a storage area where both heating and cooling are ensured, as well as a regular version for individual travel. Revenue for the company at present remains significantly low, considering that it has just begun the commercialization of its promising concept. SOLO delivered 63 out of the total 193 vehicles it built during the year, pushing up its sales from $0 to $2.1 million. The management anticipates surging demand in the coming years, considering its plan to launch its Mesa, Arizona factory next year, giving it an annual output capacity of 20,000 vehicles per year. For this reason, the top-line guidance for 2023 and 2024 has been set at $8.4 million and $76.6 million respectively. SOLO reflects a massive opportunity that could present a global breakthrough if the company can execute its ambitious strategy without obstruction. The stock is definitely one worth keeping on your radar. That's all from us in this video. We hope that the information presented has been insightful, and has managed to shed light on some highly promising penny stocks for your portfolio. We would love to hear your thoughts in the comments below. To gain a deeper insight into different stocks that are fit for various investment strategies, be sure to visit our website, stockstelegraph.com.